Good morning, traders. Welcome to the TraderLab. I'm your host, Tom B. Thanks for stopping by. This stream is being streamed exclusively in the Bookmap Discord TraderLab community. It will be posted later on YouTube, but if you want to watch these streams and the market as it develops in real time, use the link in the bottom of YouTube, and this will be posted later. But you can always access the Bookmap Discord TraderLab community. It is based on the business side of trading, how the market works, why it does what it does, how to integrate Bookmap order flow tools with a structured process using structured trades, and of course the community. There is a link in the bottom of YouTube if you want to visit the Bookmap Discord TraderLab community. There's no cost for it. And these streams will be live in that community for this week. And if you want to be there, take advantage of it. This might be something to consider. And thanks for visiting the TraderLab. And for those of you who are already participants in the TraderLab, welcome. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Today we're going to be talking about something we don't get to see too often, and that is an opening type and early discovery of a potential trend day configuration and how you might recognize it using market-generated or auction-based information, taking advantage of market structures, and this is what the TraderLab is based on. And of course, you know, the market is random, it changes, but the earlier we can recognize change or a specific condition, and this is called context, and the earlier we have the opportunity to position and maybe capitalize on it. And of course, the outcome of any trade or any condition is random because the market can always and is always discovering a valuation, so change is constant. By the way, if you haven't taken advantage of this, there's a free month of Global Plus for the best trading companion photo. Use the hashtag BookmapPets. Feature your trade station behind it with your buddy. Also, you can get a free digital version of Bookmap if you want to put Bookmap in the background, or at least get your hands on it, and that's available at bookmap.com, plus a lot of other information. Just post this with the hashtag BookmapPets on Instagram, X, or LinkedIn, and you are there. You are submitted. There's nothing more to it than that. Now let's get into the condition of the market. This is a higher time frame as we might think of it. Now we know we're in a bull market. I think we might agree that's possible. The other thing is these are called micro composites, and all they are is a composite of volume. And if you subscribe to the idea that volume is a key ingredient to what makes the market move, then we might want to analyze what it means. Because even if you're using your indicators, it's an attempt to translate behavior. What I have found over many years of doing this is that ultimately the behavior is based on the participants, not the indicator. And it's also based on value. Now, what is value? Prices are not created equally. When you look at a candle and you see all these prices in here, or even Friday's high, is that price equal to the price at 48 or the low of the day? Are they equal? They're not equal. So when we're looking at candles, we're not getting all the information. We're actually at quite a disadvantage because other traders who have maybe more usable information, and I believe information that is usable is where you focus, and information that is extraneous, distracting, and conflicting should be reduced or eliminated. And the more you can create structure, the more you can measure it. When you have too many variable inputs, that to me is gambling. Now, it might not be for you, but I have found if we look at the business model, it is gaming. And what is gaming? Playing games, if you will, like casinos do, that have a statistical edge and they don't change them. Let's look at the condition of the market. So this was our previous all-time high. We had an inside, we didn't have an inside day. We broke out here, and then we started a new up move. Trend day on Thursday. Friday was a rest day. And Friday we were anticipating in the stream, as you know, potential rest and responsive selling, profit taking. Now, if you look at Friday, you'll see that, they didn't do much of a job here on the selling. I mean, we anticipated what's called responders, and that means markets at all-time highs. Friday, I'm getting out of here. I'm getting in the Barca Lounge. Who wants to lose sleep over the weekend? But what happens with these sellers? If the market is higher today, what are they going to do? Well, maybe get back in. So let's look at the structure. Now I'm showing you again Friday and Thursday, just another way to look at it. This is market profile. Now this is our trend day up from Thursday. Off to the races, having a great time. This structure down here is an outside edge. In other words, the acceleration. And this is a low volume area. Low volume is urgency. The market didn't hang out. You'll notice up here, and this is Thursday, we balanced out. We started rotational trading. Like, okay, I need a break. Rotation. And for longs, and I narrated this in the stream on Thursday, and if you watch Thursday's stream, you'll see this last trade in the end of the stream was out here, up to here. So it's called mean reversion. Mean reversion is the most common condition of the market. And if you come to TraderLab, I always encourage traders, learn how to trade this, because now you have structure. The outside, back in, and this high volume is the mean. Now, Friday, what did we do? We made a new all-time high. Oh, it's wonderful. And then we got our profit taking. And then you'll notice we start rotating from the other side. And towards the end of the session, I think it was the last half hour, even maybe 15 minutes, we took out the longs who were in here, and then we came back in. And in Friday's stream, I was saying to you guys, as you remember, that I had a couple trades. I had longs only. And then if I came out the bottom, this is called the IBF. This is a structured trade. I would get long. But it did it at the end of the day, so I did not take this long. Other traders in TraderLab did. This is a structured trade. Now, the reason I outlined this for you was to show that Friday's behavior was inside of this consolidation. And that's what this is. Higher and balanced up here. What did we do on Friday? Higher, but balanced. So the market there's energy in here. There might be shorts in here. No clue. Not my job, right? But let's go a little further. Let's look at what we know. Here's what we know. This line is the volume point of control from Friday. Now, what is a volume point of control? These are just terms. A volume point of control is high volume. I equate trading to shopping. So let's forget all this complexity and all this fancy talk. Let's just get down to what it is. What's too high, what's too low, and what's fair. What's too high? This shuts off the buying. I'm not paying that on Friday. And what's too low? Oh, you're giving me a chance to buy it on sale? And what's fair? Where the most volume. Same thing in your store. Price is too high, you won't pay it. Price is on sale, you throw 4 in the cart, and then here's the regular price. Now, the thing about us versus your store is this is an active auction in real time. So it's always going to be going, what do we think of this? What do we think of that? It's too high. I'm at it. So this is dynamic in real time. Your store, different time frame, right? That makes sense. So what do we know about this? This was the fair price on Friday. But what about our auction? It's constantly changing. It's constantly checking. And this is an ongoing shopping experience. Here's our ETH. Now, this was done, I don't know, 5:36 this morning. Who knows? But where did we test? This is the retail price from our trend day. This is Friday. Now, this is full session, so it's got everything in here, including the ETH. Notice on Friday where our support was. It was that black line right there. So this is the ETH low. Too low, Lewis. Up we go. Now, oh, that's cute. Now what? Today, ETH, what do we know? I guess, hold on. Let's try this. Too low. No precision. Horseshoes and hand grenades. And then what do you see? Extension. What does that tell us? Lewis, we're over yesterday's high, a new all-time high, and we have this. This is a balance area. When you break out of balance, it suggests north by northwest. All right, is everybody with me? And if you're in the TraderLab, guys, post your questions. I'm not looking at YouTube. We're not streaming in YouTube. This is just for you guys. And anyone who wants to be part of TraderLab community, you got an invite. And if you want to review this stream later, it will be up on YouTube. Now, you know the levels. This is the previous all-time high from the RTH Friday. This is the ETH high. Oh my goodness. What does it mean? Buyers. What is this? Well, you know about the naked volume pointer control that we tested. Let's come back and look at the levels and how you can do this, maybe. The ETH low is there. On sale. That price is no longer valid. You could have bought it on Friday, but you didn't want to. Today, so sorry, Charlie. ETH low. You heard of Charlie the tuna? Now, for the 2 days, 49-ish is the fair price. I won't go into that so much, but hey, it's meaningful. Now, let's go to the next auction. The ETH, last auction. If this is too low from Friday, we checked it. Oh, it's on sale. 4 in the cart, Tom. Okay. Now what? We go through our ETH. What do we know now? This is the retail price. But what's this? The ETH high. Do you think there might be the old message in the bottle right here, like go north, young trader, go north? Maybe. So now we have the lay of the land. What is it? Higher time frame up, intermediate time frame up, ETH time frame up. What else you need? I don't know. So let's look. Now, there's something I always talk about in TraderLab, and I want to make sure that you guys don't miss these things. And I know we're all enthralled watching the rotations, but this is about the business of trading. You'll always have time to trade if you actually learn how to trade. But there's a lot of things that go on, of course. So first thing is, often we get what's called an open auction. And that is what's really key about this is something called the opening swing. The opening swing, and if the market is aggressive and we get the opening swing, let me just get the 8:30 Central RTH open for me, and there's the open. It's right here, okay? So right under here, got to make sure I got the right spot here. I believe it's right. Guys, opening swing low was it? Let me look. Uh, 60. It looks like, guys, can you give me opening swing low? I just want to make sure I have it marked right. TraderLab. Five quarter. Thank you. Okay. This is the opening swing low. Well, it's actually not the opening swing low. No, it's not the opening. Well, you could call it that, but it's really not. I don't think. Wait a minute. 65. Yes. Okay. Sorry, guys. This is the opening swing low. And thank you. And why is this important? If the market opens and we get our buyers there, then there's going to be these buyers, whoever buys is going to have their stops under here. And what's important to note is if that happens, the buyers in this swing, if we counter rotate, can get taken out. And of course, it doesn't have to do anything. So let's wait a moment here before I go on. So we want to know the opening swing low, and we want to know where the opening swing high is going to be. These are going to be very important. So let's take a look. What is the condition of the market? There's a couple of issues here. One is the ETH inventory is 100% long. We're at new all-time highs in the ETH. We opened right at the ETH high. It is long. It is long in the ETH. We're above settlement. We are long. Okay. The possibility exists to rebalance the inventory. When we get these early buyers, we can rebalance them plus the longs in the ETH. So that's a possibility. And, you know, the thing about trading is it's not predictive, it's maybe. So we're opening out of range in a gap. What does it mean? The market's out of balance. So now the question becomes, is the market going to be responsive? Now, what does responsive mean? Are we going to get sellers? Well, maybe. And of course, you don't know. So in this configuration, there's two possibilities. One is something called just an open gap go. We're out of here. I'll send you a letter and a couple postcards. Or we open. The opening swing low is here. We open, we come back and test and pick these longs out at some point. And then if we don't get sellers beneath, it is an inventory grab. So that's the possibilities. And nobody knows. So let's look here. We have resting liquidity. That's nice. Let's see what happens. Hold on. I got to just turn some levels off right now in IRT just to keep things nice and neat because they're exporting current levels. So we don't want that at the moment. We want to look here. Okay. So right here is resistance. This is called VPOC migration. Now let's start putting pieces together. Language. This is called the variable high volume node. I created it. I didn't know what to call it. And the reason is the VPOC, or developing volume point of control, that yellow line is the current value or high volume. Remember, retail price in your store, and now the price is higher. It's no different than what I was showing you at the top of the stream when I talked about the static points of control, the overnight volume point of control, and the naked volume point of control. The process is the same. The joy of all this is the rotations are random. That's what's hard for us. But if you step back from the rotations, you can organize it and define it. And then you have to stay in alignment with it because the market's always discovering price. It's looking what? Too high, too low, fair. And it does it in all fractals or time frames. So under here is our stops, VPOC migration, going to the moon, right? So what is this? VPOC migration. VPOC migration. All this is suggesting we're going higher, and we're at new all-time highs. Let's remember opening swing low and the gap. So we know the possibility always exists to fill the gap. We still might do it. Not my job, not your job. Our job's alignment. So let's look at the changes in behavior. So there's our leg. You guys should take notes always and review these streams. Don't sit there passively. You're wasting time. Grab screenshots. What does it mean when we come above here and you have this? What does it mean when I come outside of this and this now might be support? What does it mean if I have this, a variable high volume node and liquidity, and now I come up here, new variable high volume node, which is the new retail price. Now, come on, we're shopping now. What does it mean? What does it mean? Let's look at what it means. Language. This is market language. I don't use indicators. I learned to speak a foreign language. Yeah, it's very foreign, and I have to stay focused. Right here is my support. This is my resistance. Do I know it's resistance? Only after I break under and I don't regain it. Right there. Now I have a sweep, and this suggests a counter rotation. So right here, it's like, get over this to go higher. That's logical, isn't it? And I have this sweep, suggests counter rotation. And now there's the ceiling I just hit my head on. Ever hit your head on the ceiling? Let's see what it does. Isn't that interesting? So what does this do now? Well, I know my stops are here. Do I want to stay long when I see a VPOC migration transition? Now here's the thing. It's not what you do. It's what your education in the TraderLab suggests, and then your vetted plan. Is this a behavior that you do anything with? Do you understand? See, your trade plan tells you what to do, not this. Only your plan. If you have in your plan, if you got long whatever, here or wherever you did it, if you did, or you were getting long here and you can't get above here, what do? Isn't that resistance? Or do you just put it on here and throw the Hail Mary pass? But you know that is resistance. You see? That's the thing. So I don't know the answer for you. Your trade plan has all the answers in it, all of them. And any part of it that does not have the answer, then you don't have a trade. You have to have the complete A to Z process that's been vetted with an edge. If you're doing anything else, you're just sitting with the gamblers, and you're going to have winners, of course, and you're going to have losers. And if you don't have an edge over time, I suspect, like every other trader who's walked in your shoes, that you will not have a sustainable business. Now, we all think we're going to be the exception, but history and statistics suggest something different. So, too high, no clue. Here, teeth chatter. If you're in the trade, it is in trouble right here. Let's watch. Watch the structure. Where's our resistance? Isn't it there and there? Isn't this true? If you bought the mid, you've got to scale. I'm just showing you some trades you can vet. You could trade. You could scale there, and you got to get through here. Not so much, as they say. Let's see what it does. Now, where's our opening swing low? It's here. So now we come down. Now, right here, no clue. We take the stops out and notice the buyers come right for it. This is an inventory grab. So what we did really is we opened, you think about it, and this has drivey behavior. This is just, to me, a cheap shot on the longs. If we can't, and when this happened, and this really puts the whole thing in question, because right here, it's, are we going to fill the gap, right? And there'd be nothing wrong with that, other than, weeping and gnashing of teeth because your stop gets taken out. So this, when this happened, this was a long. Now, getting long here was very difficult. Okay. So let's look at some possible longs here. So now we have something called the IB, which is going to be the first hour's high. We are out of range, and we could not fill the gap. This is very aggressive buying. So what I know is when I see this, and it's if this, then that. So if you take out the opening swing low right here, and what do I get here? I come down, and it looks like it's going to zero. And look at these buyers. This is aggressive buying. Okay. So right here, and I don't really want to discuss my trades too much. I want to stay with structured trades. Right here, this, because in my mind, when I saw this, I just figured, we're going lower, and that's the end of the whole thing. And no. So, and once I get above this, And now here I get a sweep, and this liquidity is still in here. So right here, I'm looking at this and I'm saying, well, there's my sweep. I anticipate a counter rotation. This is resistance. Now, this is a potential order flow trigger. I'm going to show it to you. And by the way, I take stops, so no big deal. It really isn't a big deal. It is a deal, but not a big deal. It's only a deal because of my disappointment and the emotional attachment, which I try to really minimize. But it is just what it is. So this is resistance. This is my sweep. I'm above here, and I break high. So right here, when I come back here, I'm looking at a long right here. And I've got the IB30 right here. So I'm looking at this and I'm saying, well, I got IB30 right here. And right there, I get above it. And that suggests I'm going to take out the first hour's high. So I want to focus only on longs and buying counter rotations. I break here. Now, right here, I'm looking at this for a long. Right here is my entry. So you know, actually, no, it was here. Pull back, took a long here, took a stop here. Just telling you. Okay. I go, all right, well, that's cool. You know, now what? Now I'm looking back here. I got my VWAP, but my high volume is now here. So I have over 90% probability, past performance not indicative future results, to take this out. So I'm still looking on the longs. So I have to come back and I have to look at what's too low. Too low might be here. And, you know, if we come out the bottom, it's all over. There it is. So right here is a VHVN, and the VHVN is there. So I know if I get above this and I come back, I can be looking to get long. Now I took a long in here against this with the stat up here, and I have to clear this. So it was a long, a scale, and then helmet. Now there's my IB stat. Now here we have a sweep, and this is the mid and the VWAP. Now this is gone. Okay, this is not material anymore. Now I pointed out in the TraderLab, and it's very important that you guys screenshot this. And here's why. You notice we're coming up, a little liquidity here. All right, but let's look at this. This is a screenshot opportunity. It's like a photo op. This right here, you notice this. Now, where have we seen that kind of liquidity? Not really, but look at this. Look at how it thickens up. Now, nobody knows when it comes to liquidity, I always think of it like standing on a banana peel, because you don't know if they're going to pull or they're going to press or what. And then the other thing is, and I posted this in the TraderLab, and those of you who are not watching this live, you might want to visit TraderLab if you're watching this in YouTube. Don't forget there's a link down there. You just have to confirm your Discord username. You won't be abused, solicited, or otherwise harassed, but you'll get a big hug from the TraderLab. So this is this resting liquidity. So the question becomes, when liquidity comes in and we see the selling icebergs, are they going to absorb these buyers? Or are the sellers going to absorb the buyers? This is what the delta is about. So the delta is here, the green bubbles, the buyers. Well, what we don't know is there's always a passive side, and the passive side is icebergs and limit orders sitting in the book. Here, let me show it to you. So you see this block, how it's staying in the book, and I'm not getting above it. So I'm seeing the icebergs, and I'm seeing this is the delta just being reflected. What you see here is here. So you can also look down here. I see the buyers, but I don't see the market going anywhere. Now, here was really important. I have a higher price and less delta. Those of astute indicator aficionados, higher price, less of something, delta divergence, right? Would you agree with that? So if and I don't know until hindsight. So right here is my microstructure. This stuff is sitting in the book. I break low. So I now know maybe this is too high. And again, clueless. Look at the book. And we come back down. Now, where were my buyers? See this aggression? If these, and there was a sweep here, all of these are opportunities for longs if they're vetted. Notice the liquidity comes in. Notice the reaction. Here's the mid. Here's a sweep. This sets up a possible long here. I took this because I think I'm in a trend day. I don't know. What do you think? And I'm trying to go here for my scale, next scale. Actually, I work in and out of the market. So this high volume up here acts like a volume point of control. It's the retail price. Fractals now, or multiple time frames. Notice the liquidity jumps in here. Now let's talk about another element. This is the current retail price. It now has moved higher. This says if you want to buy your S&P at the moment, you got to pay more for it. Well, how does this work? If this is the retail price, we can rotate around this. And the objective is to come here. Now, I don't know if it will. No clue. Not my job. I have another statistic for you, by the way, that I forgot to give you. And the market can and will do whatever. Right now, the ups, since we're out of balance, and even though intraday we are rotating, we are creating a higher valuation unless we reject it. So this is going new price. Too low. ETH, too low. These, too low. Stop pick. And if we can stay above all of this and not come under here, we have the opportunity to go north. And again, not a recommendation. But there is a probability, and you have to vet everything for yourself. It's about a 74, almost 75% probability, and we open higher outside of range, that we can get to 1.5 times the first hour's higher low. Well, given everything, that's there. So for me, other than scales and, promising I'll never do it again, this is a target, and then whatever happens, happens. There's nothing else up here, so this is like a measured move. All you got other than price projections. So this is too low, retail price, and the market is now rotational. So far, now we have to be careful. There's stops under the mid. That's where retail traders keep their stops. But let's look at what we know. Too low, buyers, counter rotation, buyers. So, and now VPOC migration. So we can, of course, come under here. We can go up until it breaks. It's not broke, is the old saying. So for me, this is where I'm trying to go. Sorry, here. Let me just look here. Yeah, up to this. So 78, 79-ish, which is where we found too high, right up here is the area. So for me, assuming things don't go south, which they can, my next scale, and it's not a recommendation, is ahead of this. Because there were sellers here, there's going to be stops there, there were stops there, and there's going to be stops here. So the sellers took over here. So if we come back up, I want to be looking to scale in where these stops are in this, ahead of where the sellers, which are here, took control. That's my objective. And whatever happens, happens. It doesn't matter. I mean, of course, I cheer for my side, but whatever it does, it does. That part's random. I just follow a plan and, you know, leave it up to statistics, and I don't get attached to this one trade. I certainly have an emotional attachment, how I feel about it, but the business is not based on my feelings. It's just based on the plan and the statistics over a random distribution of outcomes. I know it sounds great in theory, but when you're sitting in a trade, everything goes out the window, right? Well, that's normal because we're human, but that's not the business. The way to think about this is the casinos don't change their games. They're not attached to the outcome of one hand. They only play the games the same way so they can realize their edge. They don't know the outcome. They don't have control over anything but the way they play the game. We don't have any control over any of this. So we only have control over ourselves. If you ever have to ask yourself, what should I do? It means you need to work on a plan, because all the answers exist in the plan. The market is random. When I refer to anchored inputs, it's about each piece is laid out in advance. For example, if this is part of your plan, here, when we get a sell trigger and we can't get back above this HVN, that might be your time to exit, like under here, because that's resistance. When we come back to this structure and we can't get above it here, that might be your clue to exit, if that's part of your plan. I'm saying if because your plan and my plan might not be the same. I may be trading for this. You may be trading this, and this to there. You know, I mean, that's the thing. What is your plan? So by the way, if you're in TraderLab, I posted a lot of material about the business of trading. I posted it over the weekend, and I also put links down there this morning for you guys to read it. It was very detailed, and I took a lot of time. I hope you'll reflect and respond to the time I took based on my the importance of it, that you read it and also respond to it. If you could speak to yourself, if you could go back in a time machine and talk to yourself as a developing trader based on what you've learned from your experience, what would you put your arm around that trader, and what would you share with that developing trader? And we are all developing traders. What would you say to yourself? What have you learned that you didn't understand when you started out? Could you cut years off of your development if you had someone put their arm around you like a wise uncle and clue you in? What would you say? Please post that in the TraderLab for all of us, because I want to hear what you would have told me, and I'm posting what I would tell you. So I hope you get something out of that. Please take the time and please respond to it. First, my opening opening swing, it's not time-based, it's rotation-based. That's what I can tell you about it. For me, I always think about, there's nothing rigid in trading, so it's not 30 seconds. But the opening swings, both sides of the swing, something you'll notice, and this is another thing that is incidental and you have to go back and ponder. If the market opens and goes up first, it might be to squeeze shorts out and then the true move is down. That's one element. The other part is the market can go up first, come down, pick off the early buyers, and then exhaust and be absorbed, and then you get this, like we have today, trend up. Now, currently, I can't call this a trend day, but depending on your time frame, but I will say I see nothing at the moment other than counter rotations to suggest to be short. And again, individual traders operate in their own time frame, you see? So that's why there's not a right or wrong. It's always about edge. So what I know is this right here was too high. And I know is the market tends to come back and check levels. This is my current developing price, retail. So retail in this store, think of this like your convenience store. That's kind of how I relate to this. We went to the store to buy our pint of ice cream Saturday night for the movie. And you'll see where this outside edge is. This is a low volume node. High volume is the retail price in this. If this is too high, hasta la vista. If it's still too high, hasta la vista. If I can get back in here, test. That's what I know. Where might it go? Here and north. Also, where might it go? It may never get above here and it may fall out. Isn't that the truth? So if you're in TraderLab, you would know, if you've been doing your homework and you're integrating the language of the participant behavior, you would know this is an outside edge. And if we get in here, then and there's stops here, right? The fuel from these sellers is here. If I can light these guys up, their buy stops, the buyers then can come here. So my scale, and I'm not recommending this, is where? Here, there, against there. And I've been sitting long in this thing for so long, I can't remember. That's how long it's been. Because I trade larger rotations. So it's just me. You know, trade from the Barca Lounger and have an airplane sickness bag right next to it, right? By the way, I am quoting the December contract going forward. It was rollover. It rolls over all week. There is a spread of 66.75 points between the September and the December. Everything is the same volume-wise and structurally. So all these levels here were just adjusted by the spread, and everything stays pretty much the same. Very little change between them. I use a back-adjusted higher time frame chart through Investor RT, so it's equalized, so it's a constant. So there's no gaps in the data. And then this is the December contract. I kept the September up here just for joy. And I'm not going to switch it because I don't want to make trouble. So let's see if we can get into this and here. And I posted this in TraderLab 78.79. That's another scale for me. Not a recommendation, just hanging out with you. And I'm going for this because I don't have anything else up here. I do need to clear all this, okay? So, and these aren't trade recommendations. It's just, you know, lay of the land. So I have a couple more runners here, and I have no clue, you know, so we'll just leave it at that, okay? So what I know based on the structure now, wherever this went, here it is, I need to clear this, and I still have this sitting here, which pressed. It's coming back in. So we have to see the behavior as we approach it. So the order flow is giving us some information that we wouldn't have otherwise if we didn't have Bookmap. So now, but here's the thing. Now this is resistance, this high volume, right? This is like a high volume node is like a VPOC in a shorter time frame. So this is the auction. Too high, too low, retail. If this is too high, I'm not paying that. We leave, we get in the car, and we leave it, okay? Now this is now the current retail price, and this was the previous developing retail price. Now, so I don't confuse you. The whole day, this is the highest volume for the day so far. And you'll notice that this high volume or retail price has been migrating higher. I developed structured trades off of this behavior. Neither here nor there. They're available in the TraderLab. It's not only the TraderLab community, but a library of webinars, document section. And Ned, thank you for curating that. And now this is my resistance. So let's watch the behavior. This is important. Now here's what can happen. I can just come up here, rotate. If I rotate down here, it sets up a condition called mean reversion, which would already suggest outside in trading potentially. This is part of what we do in TraderLab. You know where your next trade is. Now knowing means not what will happen, but knowing the location and the behavior that qualifies a trade. If you don't know these things, you are not ready to put dollars at risk. You do need to do the work to know where your trades are. And it's like waiting for a bus. Everything that's happening in between, at least for me, is random. I see things all the time where I say, if it goes here, it's going to do that. But I can tell you, I spent maybe 10 years or something, I don't even know anymore, out of 46 so far, predicting what it was going to do. And the problem with that is it did it a lot, what I thought it would do. So I thought I actually, could trade. What I could do was place an order. What I didn't understand was the fact that there was random behavior. If it didn't have an edge, it was just really a process to lose in spite of random winners. And that's what gamblers do. They win, but they lose over time. Do you know the difference? See, the TraderLab's about the business of trading. And if you're not paying attention, you're going to keep doing what most other retail traders do. And their success rate is abysmal, as you know. So when you come to TraderLab or any educational portal, you need to, first of all, qualify the individual, the influencer, the whatever, make sure they actually have knowledge that's transferable and usable. And don't get swept up with FOMO and greed, because any educator who's actually knows what they're doing, they're going to do everything they can to restrain you from doing things that are not in your best interest. But your primal wiring, your FOMO, is going to disregard that. And if you don't recognize psychological impediments right from the beginning, you're going to be falling into a trap. And the trap is FOMO and greed and not being able to control yourself. First thing is controlling yourself, becoming a CEO of a business, and then managing that trader. How would you manage you? Would you give yourself $100,000 based on your behavior and your process? Would you give that to anybody? I asked some of these questions in TraderLab because if somebody had asked me very early on, would I write a check out for $100,000 for myself? I would say no. And of course, I didn't have $100,000 at the time. That's the other thing. But thank God I didn't. But I can assure you over years and years, because we had no funded accounts, if you wanted to trade, they had a thing called paper trading. Remember that? Or SIM now. But paper trading was because there was no technology. You had to write it on paper. So I spent a long time paper trading. But I still didn't have a good process for extracting metrics. So I saw this randomness. And I said, well, this looks pretty good. Let's do that. And I'd have winners and losers, but then over time, you start observing, in spite of random winners and moving the ball forward over time, the ball's not going in the right direction. That's unsustainable. Is that you? Well, then you might be a gambler and you don't know it. You have to differentiate between where was our obstacle? Wasn't it there? You see, this is the auction. You can learn this. And it's not predictive. It's just behavioral. Why did the market come here and why is it potentially rotating off? Maybe it's too high. Maybe it's not. I don't know. What do you think? Where's my next layer of stops? It's here and, of course, here. And where am I trying to go? I don't know. Go there. Why, you ask? Well, there is nothing else up here except oxygen and thin air and it's almost a 75% probability. Past performance not indicative of future results. This is where I'm trying to go. And I have no idea. May never get there, right? So that's it. You guys have questions. This is not complicated. It is random. And if you can't control yourself, you're in trouble. We broke above the IB high and pulled back into the IB range. Tested the IB high from below. Why didn't you consider this a change of behavior to think IBF or shorts? But is that enough to execute the IBF? More often, the answer lies in your stats. I would not take a short today. The least, if I did, things would have to change substantially. How far back it rotates, I have no clue. I am looking at the behavior from the open and the test and what I call an inventory grab and the test of this level, which was important, and not filling the gap. So for me, I would not take a short today. I just get taken out and let it go at that and not really think much about it. I just trade what I perceive to be the dominant side. The market can do anything. So if you're asking about the IBF, I don't short the all-time high. I may trade rotations. That's a different plan for me. But in general, I'm just here to work statistics. And this is my highest statistic that's currently open. And the market can definitely come down. We have a major report. We have retail sales tomorrow. We might get evening up in front of it. And we have FOMC on Wednesday. You never know. We don't know if the market's going to go up first, then come down or go down. And this is the end of it for the day. And that's life in the fast lane. So you're asking me what I would do. I'm only responding to my trade plan in my time frame. Shorter time frame traders in TraderLab are going to be maybe fading. I wouldn't do it, but that's only because I've been there, done that, and it's not worth the brain damage for me. As you guys know, everyone finds kind of their groove. And for me, my groove is larger rotations because of risk reward. So if I don't have risk reward to justify my risk, and my stops are around 3 to 4 points. I mean, I like them less, and so that's pretty much it. That's just the way I do it. Now, there's other traders in TraderLab, names withheld to protect the innocent, that will fade, get long, short, and do whatever. They're in a different business plan. The product that we trade can be generic. The rotations we trade is individualized. Most developing traders think this is the more you do, the more profit. It actually, let me put it in a different term. The more you do, the more risk. So if you don't have edge and you're attempting to do this without knowing how to do it, you're going to be out of business very quickly. I'm speaking generally, okay, to everybody now. But I hope I answer your question. Why wouldn't I? Because it's not in my plan. How we doing in TraderLab? Hope you guys are doing good. I hope you're getting something from the stream. Guys, if you're watching this later in YouTube, these streams are live in the Bookmap Discord TraderLab. They are available in real time. And if you're inclined, use the link in the bottom of YouTube, join the TraderLab community. There is no cost. You don't have to be a Bookmap subscriber. It is available to everybody. And I think if you're a developing trader, you would be remiss not to visit the TraderLab. It's a group of like-minded traders who've come together to leverage their collective experience. Doesn't matter how long you've been trading. We have some very profitable, successful traders with a lot of mileage on the odometer in the TraderLab. We've all done the same thing. So if you're a developing trader and you come into this with certain beliefs about what the business is, they may be misdirected. It is not plug and play. You can't replicate what anybody else does. You can't trade like I do or other traders in TraderLab. What you can do is learn how the market works and then develop trades. And you'll find some traders can't hold the trade through counter rotations. There's other traders in TraderLab. I don't want to mention, well, I will mention a name, Rod, who will put a trade on, and basically he has a Barca lounger and he just gets in the thing and lets it go. And for many of us who have more attachment, we can't do that, you see. So that might not be psychologically aligned with some of you, and maybe even most of you. But if you think about where the profits are in this, in a leverage vehicle, isn't it risk reward? And then it's a matter of what is that relationship that gives you the overall edge? You know, why is this level an obstacle? What about this liquidity here? Because for me, and this happens, it's not it is what it is. If I'm sitting with stops outside of all of this and it gives all this MFE back, you're going to hear some noise coming from Chicago. Emotionally, it's going to be the lunatic who I call Hyde going, you should have got out. You knew this was resistance. You know this liquidity is here. You know it can go down, of course. So I know that. But hindsight is going to give me negative feedback. That's Hyde, the lunatic. But what about my 74% probability? What's more important, my fear of loss or my statistics? Which one of those is tangible versus emotion? You see? Is that interesting? Well, you're welcome. Is that Elsa? Hope I'm saying it right. Hope you guys are doing okay. Watch the behavior. What is this? Why didn't it go up? 146 buy stops. Really? They were absorbed. What's here? Sellers. What's here? Buyers. Buyers. Sellers. What's here? Buyers. You're saying, yeah, but there's a red delta. Why did it not go down? Buyers. Buyers. Buyers are there. And right here, important. Can I get above these sellers? What about the buyers are here? Who is going to win this little auction? Everywhere there's a consolidation is an auction. Sellers are here. Buyers were there. Break low. Where's my resistance? That's right. There. Now there. You see, it's all the same. And I still haven't gotten above this thing. That's why it was a scale, you see. So I take these structures and I look at them inside of each other. In other words, the whole auction so far today is too low, too high, retail for the day. Then as I go down in time frame, I can see inside of this. This is an auction here, inside of the bigger one. Too high. I'm not paying that. Okay. Then here. Too high. Now retail in the developing daily time frame. And now if we go into balance here, then this is our outside. And then we can, it can come under here and take all these trailing stops out. That's the way this works. Market goes down to go up and goes up to go down. The thing we don't know is where's down, where's up. We have a sweep. We want to watch this. This is important. Now let's watch the behavior. We had our mid buyers. There's a ton of stops right here. This was my last long, I believe. Let me go look. Yes. So when I put this on, And for me, that's my last long. And well, let me just say I'm building a position, so I've been taking longs. But let's just assume this is it, okay? Then where's my scale? You see? It's ahead of this for the ad. And then it's just whatever, you know? And if it comes all the way down and takes me out, I'm still good. You see? I'm not euphoric, but I'm quite good. I'm just saying, it's just a way to think about this. Trend is up, new all-time highs, 74% probability. Why would I get out of the trade unless it fails? Just a question. In my time frame. Now and I know traders in TraderLab are going to be like whirling dervishes. They're going to be selling this. They're going to be maybe buying this. You got to sweep at the VPOC. You're holding the VWAP. This is a VWAP to VPOC, not qualified by range, but it is qualified by structure and trend. You see? When I'm sitting here, this is a structured trade, not qualified. Right here is a trade, right? If this was out here, wherever, go on. It's over here. It's something to observe. Isn't this a structured trade, not qualified, guys? VWAP to VPOC. Does it make sense? Is there any reason to be taking shorts unless you're a rotational trader? I always like to mention, I used to be a high volume trader. And now when I'm saying that, I'm talking about 2000, 2001, that kind of thing. In the dot-com bust, you guys have heard of that. And, 100 trades a day in the NQ. So if I tried to do that today, my eyeballs would fall out of my head. So I don't do it. And my cost was so high, even though I negotiated a rock bottom rate with my clearing firm, I really was at the point where I had to go lease a seat to lower my cost, And I just said, no, I just didn't want to go there. I didn't want to do it. To lower my costs. So I said, well, maybe I'll just adjust things. So over time, I just started slowing it down, trading less and starting adjusting my parameters. Also, once that all was over, the volatility collapsed. You could still work in the NQ, but I couldn't trade I used to trade the ES also, but the ES turned into almost not tradable. Now, this is many years ago, don't forget. So it's not like that today. Notional value was very low. I don't remember where it was traded. Could have been 2000. I don't even can't remember anymore, but it was not much. So, volatility was less. So here's our sweep. Is this too low? This is what our HVN is, which is out there too high. So I have an outside edge here and an outside edge here. If it comes down here, I may still be a buyer. If it never comes down here, I'm just working on this. That's why I'm just sitting here. I'm able to visit with you. I'm not stressed, but I will tell you that my stomach kind of goes, I get this. It's almost like being on a boat, that's rocking in the ocean. You ever been in the ocean in a small boat? I have. Deep sea fishing, so it goes down. You get depressed. Here you have euphoria and hope. Here you have depression. That is your emotions that are attached, okay? Your attached emotional state. Oh, no. Oh, great. Oh, no. See? Oh, yeah. And I'm making a point of sharing this with you because you're probably doing the same thing. Come on. You cheer, you talk, you yell, pound the desk. Fine. But don't respond to that. Anticipate it. The thing about a trading plan is you cannot make it up here because when you're chemically influenced when you're in the market, and if you are listening to your fear and greed, you'll bail out here. I can't take it anymore. And then what about 74%-ish probability. What about that? Just asking. And never has to get there. It's not the job. What does the market need to do? It needs to clear this, in my opinion. And why? Because this is an auction, and we said too high. And if it's really too high, we're not getting above there. If it's not too high, eventually this will either get consumed by the buyers and be gone, or will flip around. But so far, not yet. So it's not ripe. So let's watch it together. You guys have questions? How are we doing in TraderLab? By the way, if you're visiting later in YouTube, I just want to remind you guys, this is what the TraderLab community looks like. There's a lot going on. It is a serious community. It is not romper room, you know. If you know, I see we have over 100 here in attendance. Thank you. I appreciate you visiting. This is what the lab looks like. There's a lot going on in here, a lot of mutual support, charts, graphs, sharing of statistical probabilities, data mining, and a lot more. And it's open to everybody. There's a link in the bottom of YouTube if you want to visit TraderLab. All you got to do is verify your Discord username. There is no cost. It's a serious community. It's about the business of trading. There's also a library of webinars that you can, thanks Ned for this, curating. Start with the primer one. It's got about 34,000-ish views. Meet the TraderLab. What is it? An advanced trader methodology. Advanced does not mean complex. It's real. What's advanced about it is it's primary to what the market is and how it works. The market is not based on your indicators. Your indicators are based on the market. Big difference. And all your indicators are doing is trying to define price behavior through some backwards looking derivative process, but it can't get the full picture. And we all start out with indicators, and we all throw a lot at the market, a lot of indicators to create certainty. And that's just our primal wiring. We make decisions that have nothing to do with this business. And in fact, those decisions that are so logical and are based on our emotional needs to be right and get confirmation to avoid risk have nothing to do with the business. In fact, they're the reason most traders, in my opinion, don't succeed, because they're solving for the wrong thing. Why most traders using indicators fail? Are you trapped in trader Groundhog Day? That's tweaking, tooting, curve fitting, but getting the same outcome in spite of random winning trades. How do you trade new all-time highs? And there's a lot more, okay? Trading high volatility reports, trading gaps and a trend day. There's a lot. And then there's a document section, and we're always adding to that. And by the way, this is not about me. This is all about you. This is the contributions in here are from other traders in TraderLab who've put the time in and donated their hard work. That's data mining, statistics, probability, structured trades, and much more. So it's all here for you. And you don't have to miss out on this while it's still available, and there is no cost for it. But it is about the business of trading. So it's not Fantasy Island. You know, it really is, what does it take to create a potential sustainable career in trading? It's going to take more than you ever imagined, because your imagination and the reality are probably not aligned. VPOC migration. Let's come back and look at the language. Too low, potentially. I was going to say maybe. Too low, maybe. New retail price. For this astute group of traders, what might that suggest? And remember, I say maybe because the best you have is maybe. TraderLab, what might this suggest? Well, that's great. Elsie, if I'm saying your name wrong, please, how do I calculate your, okay, the question I'm getting is if you look at the stats that are shared in the TraderLab, statistical probabilities for this condition of the market, which is part of the data mining that we do. The 1.5 IB high is just a mathematical, it takes the first hour's range for opening higher outside of yesterday's range, the gap, and we did not fill the gap. So far, going north, and again, we have to clear this, right? This is our price where the shoppers went, I'm not paying that. So, two possibilities, by the way. This could be the high of the day. No, not my job. I can't tell you that. And this might be it. Don't know. So if I have a 75% probability of getting to 1.5 DIB, it's just 50% expansion of the first hour's range. That's all it is. But it's the only thing we have. So, may never get there because it's random. 74% probability-ish means there's roughly a 25% probability we don't do it. That exists. So, how do we deal with this? If that's too high and I can't get above here, then we might have the high of the day. It's not my job, by the way, to say it is the high of the day. It is my job to say it might be the high of the day. And I won't know, just like you, until hindsight. So until the structure falls apart and I know where's my next trade, it's going to be out here unless it keeps going. What is this called, by the way? I'm getting VPOC migration, suggesting higher prices. I have this up here suggesting too high. So I have too high and I have higher prices here. If I can't get through here and this becomes too high and that's too high, then I can come down. And if I come down, I already know where my next trade is. It's going to be out in here for reversion back to there. It's called mean reversion. This is the primary trade I suggest all traders develop proficiency in because it's the most common behavior. Now, in a trend configuration, we wouldn't be balancing out like this. We'd just be running away. Well, don't forget, he reports tomorrow. So we can anticipate profit taking ahead of retail sales and FOMC on Wednesday. The beauty of trading and the unknown is when, where, if, right? So let's see what this thing does. VPOC migration. Too high. Too high. To go higher. Now we have to clear that. Let's see what it does. So what I'm doing here is I'm narrating the auction. I'm able to go, well, that's too high. There it is. So I know I got to clear that to get there. If I don't clear that and make a new high, I'm hanging out. If this becomes too high in the next higher time frame, if you will, then we can do this. If I come down, then I know my stops are sitting under here. So the market does what? The market goes down to go up. If I find resistance, the market goes up, potentially to go down. Now, am I okay with getting taken out and getting taken out of my longs? I have to be. So then I just wait and let it do what it's going to do. This is what having edge is about. Not this one trade, not this unique sample. It's this large sample size. That's the thing about edge, is to understand edge is over a random distribution of outcomes. It's not this trade. Emotionally, I'm as attached to this as you might be. I want it to get there. Why wouldn't I? But I know that it could just as well fall out the bottom, come out here, do whatever. So this is balance. So I'm in balance. So this is no longer a trend day. It is an upward. We're moving upward, but now we're looking at something more like a normal variation day. So it went from potential trend, but it had rotations in it, and now we're just hanging out. So it's rotational. This brings out a different plan. Well, the plan is longs only for me, not a recommendation. And the plan is also, as long as we don't get down under here, which is my last auction that was too low. If I come out here, I'm looking to come back there. That's my plan. Not yours, mine. If I get taken out, okay, you know. How do I grade myself in trading? Following my plan, not the outcome of the individual trade. I can't go, gee, you shoulda. The shoulda is going to come in hindsight. Tom, and who says that? Hyde. You shoulda got out here. Why did you scale there? You knew structurally it was resistance. Why didn't you exit there when it came back the next time? And I'm going to have that in my head. But my plan says no, because if it comes outside, I'm still going to be operating in the context of up until this. If this fails, then then it's back in the Barca Lounger. So we'll see. Does this make sense? So what do we have? Outside edge. Where might it come? So where might another trade show up? Wouldn't it be out in this area someplace? And wouldn't it be after these stops come out? And then you have under here is another area, which is the LVN. So where does everything fall apart? It's out here and stops are here. So this is the area to be observing for potential behavior. We had a sweep here and we had our buyers. So we know retail traders keep their stops here, the last swing. So subject to your plan and how you operate, this is a place to observe because retail traders put their stops here. And so we know there's stops here. And if we come outside and we know we had buyers here, then we want to observe if we get out here, LVN, which is over here, and it's covered up, but it's out right there. I should just throw this in here someplace. How can I do that? It's there. I'm going to change that to LVN because it is the outside edge, and we want to watch that because this sets up potential mean reversion, just so you know. Okay, so this. So again, what is mean reversion? Outside, back to there. So if this showed up, and I want to stress it's not a recommendation, if I get under here and then I have to be conscious of this, then this would be where I'd be going, and then it's put your helmet on and you're looking for this again, this and this. Okay? That's a structured trade. It's not a recommendation. And it doesn't mean I'm going to take it unless everything gets in alignment, and then I'll take a stop. I'm ready to take a stop on every trade I put on. How we doing, guys? How we doing in TraderLab? Please give a thumb up. Let me know you're doing okay. If you don't have a plan, let's get to work. Let's all work together, build out the business side of trading. There are no excuses for not doing the work if you're serious. If it's too much trouble, then you're just going to have a good time and go to casinos, get the cocktails and the ticket to the buffet. That's entertainment. The TraderLab's not about the entertainment. It's about the business. Compulsion and FOMO are the same thing. FOMO represents itself by being in a hurry to trade, jumping from chats, getting as many, quote, setups as you find, and then just trading them. That's just gambling, guys. So I don't like to see traders fail. Obviously, I'm doing this for a reason. Part of it has to do with my learning curve, which was beyond because I had no information. I didn't understand the business or things within myself that were impediments. I just didn't. Nobody ever talked about it. When I started this, there were no off-floor traders. Didn't know any. I'm sure there were, but all my buddies were floor traders, and I didn't. I did understand their business, but I didn't want to, go down on the floor, get spit on, and stabbed with a pencil. So I thought maybe, being an analytical and I was fascinated by charts, classical bar charting. I took a course at the CME, and they taught me measured moves. So I thought this was a business of prediction. I think anybody who learned a head and shoulders, or pennants and all that might think the same thing. I did. So I came in the business really with a deficiency, thinking that you could predict something. And I know many of you out there have been in the same boat, maybe, or even still in the same boat. You start out by saying it's going to do such and such. It's going to go there. Here's where the high is going to be. Here's this, here's that. That's looking for certainty. So measured moves are about a thing of certainty. Well, they're not unless you know the probabilities. So even if the head and shoulder, what's the probability it's going to get to the measured move before you take a stop? If you can answer that question in the time frame you trade, then you might actually be able to develop an edge. You might also find there is no edge. Isn't that interesting? Yet we accept it because somebody said it. You can't accept anything, whether you're in TraderLab or anywhere else. You have to prove it, because otherwise you won't have the confidence to execute and manage your fear. We always have uncertainty in the moment, but if you have a probability, in spite of the randomness of it, you can work with it. So this is my probability, and this thing can just keep going, right? And then I'll go, well, 25% of the time-ish, it doesn't get there. Well, this is one of those 25%ers, right? So where am I looking again? Out here, and out here. Low volume, outside edge. This is an outside edge, and if it happens, it's mean reversion. Primary trade that I suggest traders develop in TraderLab. The reason is that we can see the structure. We know the market's tendency is to go into the stops on the weak side, which is under here, where everybody puts their stops. This is a nice long, by the way. This is a nice long. So I'm okay with that going here. You see, that's the trade. That's a structured trade for me. Then either or not. And if not, and I get under here, I'm further away from this because let's just say I build up something called theoretical average. So basically I operate where I'm moving my stop. I'm trading to move my risk further away from the market. It's just an advanced process, and it's not something anybody should do unless they can become profitable with one trade. Because all I'm doing is trading inside. I'm trading inside of multiple time frames. It's more complex, very annoying. You wouldn't like it. But it's only because over the years, I developed that as part of my process. It's not necessary. You could take 1-2 trades a day and be a profitable trader. It's not about that. I'm trading for a larger move. So I build up at times under certain conditions. I build a position, and then I work this position so I can keep moving my stop away. And if I get taken out after all that, I'm going to be in the same psychological situation you would be taking a stop. Except for me, it'd be a scratch, and the market really would have to work very hard to take me out. But when I put these trades on, I'm using still about a 3-point stop, even the ones that I'm adding, working in and out. So, and I'm not recommending that. It's very advanced. I don't know. I'm sure there's some traders in TraderLab who operate that way, but I would say most don't, and most don't need to. I'm only doing what I do based on the time frame I operate in. When I operate just shorter, quote, time frames, I could just be doing this to this and be done with the trade, you see. I just trade chunks. So if I take this as an ad, I'm really primarily going here and then have a runner. So if I add, I scale, I pay for the position, and I'm moving everything away. Just saying. It's a different strategy. So what are we looking for? This, right? And what else? This. So let's see if it does it. I'm running out of time, guys. I got 5 minutes. These are not trade recommendations. If you're watching this later in YouTube, if you want to attend these in real time, use the link in the bottom of YouTube. Come to TraderLab community. Just verify your Discord username. Discord will send you a little code, and then you'll have full access to the Bookmap server, and you'll have access to a broad range of educations, large cap, small cap stocks, options, crypto, order flow with a high tier tool like Bookmap, and other processes. The TraderLab, which is really about the business of trading, building trade plans, getting and deriving and extracting a statistical edge, and dealing with the psychological impediments that we all face dealing in a random environment when we're seeking risk avoidance and certainty in an environment where it doesn't exist. So the catch-22 of trading is trying to make it into something it isn't. You can't make it not random, and you can't squeeze the risk out. You can create probabilities, which then will create edge. And if you can develop the discipline to manage your fear and accept the uncertainty versus trying to eliminate the uncertainty, you'll put yourself psychologically in a realistic position to understand the business you're in and adapt to the actual business you're attempting to trade. I hope that makes sense, guys. So please, if you're in YouTube and you're watching this later, don't forget to leave a like. Also, come to not only the TraderLab. I'm watching the market here, so I'm kind of keeping an eye. I'm watching this area. This is an important location. So let's see what it does when it comes down here. And again, this is not a trade recommendation. We're getting our sweep. Remember what happened over here? We had a sweep. We're coming to an outside edge. We have liquidity here. You want to observe this. Full session VWAP is here. Put your helmet on. Not a recommendation. Let's see what happens. So this is a potential mean reversion structure. So let's just see what it does. It's not a recommendation. If this thing works, it will come back potentially to the high volume node, which is that yellow line, which is called the developing volume point of control. This. And then, and this is not a recommendation, so these are the components of a trigger at a location that we discussed right there, and it's called mean reversion. The primary trade that I suggest developing traders vet, because if you can learn this, and of course past performance is never indicative of future results, that we take stops all over the place. Why did it come down here? What's under here? Stops. What do you see here? Stops. What do you see here? Delta. What happens with delta? Absorption. Iceberg. Then what? Anything can happen, but this is the objective. And then if we can come up, we got to clear that, and then whatever happens, happens. If you're in YouTube, please give a like. And if you're in TraderLab, appreciate you. Thanks so much for everything and making the lab what it is. Look forward to seeing you guys soon. Have a terrific day. And if you're visiting in YouTube, be sure to visit the TraderLab.